What's up, guys? It's Eric here. In today's episode, I want to go over how I hit financial independence at age 23, walk you through the step-by-step process that I took, and how you can do it too. Okay, so as we talked about in the last video with setting a financial goal, I'm sure you guys all sat down, printed off your expenses, your credit card bills, your bank statements, all that kind of stuff, figured out your living expenses, and figured out where you can cut costs if need be. Once you figure that out and average it out, you also want to take a look at your income because what we're trying to figure out is what is your savings rate. Now your savings rate, to break it down as simply as possible, is what percentage of your income are you saving. So let's say you make $100,000 a year and you spend $50,000 a year. Your savings rate is 50%. The goal is to get that as high as possible while not, sacrificing quality of life. So I don't want you to stop having vegetables and only eating top ramen to get your savings rate up another percent or two. Please don't do that. But what I want you to do is figure out what your savings rate is and aim to increase it. Typically, a good savings rate to aim for is about 40%. If you can get it higher, definitely go for it. For me personally, currently, my savings rate is at 55%. Now, I know that could be a little bit higher. With my income, it is somewhat variable because at work I can either bonus or get commission. And sometimes I work some odd jobs here and there, but it's 55% based on just my salary alone. And also, rental income, because that's a big part, not a big part, but that's part of what I do. So figure out your savings rate, figure out what that savings rate is, and aim to increase it to a minimum of 40%. If you're at 20 or 30%, that's still great. Typical Americans are, between 0 and 10%. So if you can get 20, 30, 40 plus %, you're doing pretty well. The goal then would be to take that difference, take what you're saving, put it in a savings account or whatever, put it aside to then invest. I know we talked last episode about how much you need invested at what % return to then generate the monthly cash flow to cover your living expenses. So again, that savings rate, that's kind of the math that we do to figure out how much money you save per month and then how long it's going to take. So that's what I did. But the way I was able to achieve financial independence at age 23 is I used slightly more leveraged money, and I got substantially higher returns than the 10 to 20% that we talked about last time. So what did I do? I did the number one thing that led to me achieving financial independence at age 23 is a term called house hacking. Now, Bigger Pockets, which is a real estate community online, they've coined the term, but house hacking essentially is when you buy a piece of real estate, either a single family home or a duplex, triplex, or fourplex, live in one room or one unit, and rent out the rest. The purpose of that is to have your mortgage payment covered. The benefit of that and why you do it is if you go look at your expenses from last month, odds are your rent or mortgage was your single largest expense. So let's think about this. If we want to increase our savings rate, we need to either A, make more, or B, spend less. If you can simply spend less by cutting out a third of your spending on your rent, think of how much more money that would free up. Let's just say, for example, I know here in Greenville, an average one-bedroom apartment will go for anywhere from $800 to $1,400 a month, obviously depending on location and quality. So if you could cut out $800 to $1,400 a month, that adds up to quite a chunk of change when you compound that over 1 to 5 years. So house hacking is the number one best thing I did, and I will go into more detail in future episodes about the very, very fine details on the numbers and the specifics of both house hack deals that I've done. However, in the first one I did, I bought a triplex, which is a 3-unit residential building. So I bought that. I lived in 1/3 and renovated that third while I was living there and had the other two occupied. While those two were occupied, my mortgage was covered, and then I had an additional $150 a month. Once that unit was fixed up, one of my tenants moved out, and I moved into the one my tenant was in, rented out the one I was in for more than what the tenant who just moved out was paying, so I was now making more money. And on top of that, I got a roommate. Funny story about the roommate situation that, again, we'll go over in more detail when I talk about this specific house hack with all the numbers and everything. But so I got a roommate in the triplex with me while the other 2 units were rented out. So essentially, it's like I was renting out 3 units while also living there. When I was doing that, like I mentioned earlier, I was making $150 before getting a roommate. Once I got a roommate, between the rental income from my roommate and the additional income from the unit that I renovated, I was making $800 a month living in my house. Let's think about that. If I'm making $800 a month living in my house, and the apartment I was living in prior to doing this was costing me $1,200 a month, that is a net difference of $2,000. After 1 year, that's an additional $24,000 in my pocket because I house hacked. I've since then moved out into the house I'm currently in. This is my second house hack. And that current house hack, or the triplex, now generates me passive income because I have all 3 units rented out and they more than cover the mortgage. And again, we'll go into more details in that in a later episode. And then the current house I live in, I also make about $300 a month above the mortgage payment. But then I have Wi-Fi, water, utilities, and like HOA fees and stuff like that. So with those fees all taken out, I'm pretty much breaking even, maybe making $50 a month. But again, it's not just that I'm, not making money, but it's that I'm not spending money. I don't have rent. I don't have a mortgage payment that I have to pay for. So house hacking has been the single best thing I can do. And from the income from my house, the first house hack and the second house hack, that additional income combined covers my living expenses at ballpark $1,200 a month. And again, we can go into more detail on that later. But so because of those 2 house hacks and because of how I'm currently living in my current living situation, I've hit financial independence level 1. Now, I don't want you guys to think that I'm like, I've made it and I'm done with financial independence, because level 1 is my passive income just barely covers my necessary living expenses. So I still have a lot of passive income I want to work on generating. However, if nothing goes wrong, like it is right now with this whole illness going on, so now is not a great example, but theoretically, if nothing went wrong, I could not have a job, not work, and survive. I would not thrive, and I would not get to go live the life I want to live, but I could survive. So that is just a really great thing to think about. I could survive indefinitely. It's not that I could last, 1 to 3 months or 6 months or whatever it is. It's indefinite. So house hacking has been the single biggest thing. Third thing is real estate investing. Obviously, purchasing rental properties and renting them out and making money from them is the premise of real estate investing, at least for me, because I'm looking for cash flow. So once this whole illness kind of dies down, I'm going to continue to increase my rental portfolio and slowly add more and more cash flow. I do have quite a couple properties I'm keeping my eye on, but given the current economic climate and the fact that I don't have a job at the moment, I'm not going to go buy property right now just because I do not have the reserves necessary to take on an additional property. So again, let's go over the main things. How did I hit financial independence at age 23? It was really focusing on increasing my savings rate. Again, before I started focusing on it, it was probably around the 8 to 10% range. Now it's up to 55%. The second most important thing I did was focusing on house hacking and reducing your single largest expense, which again is 9 times out of 10, your housing payment. And the third thing is focusing on the real estate investing. Obviously, had I not bought the triplex or bought the house I'm in now, I would have been paying rent the whole time, and I would not have the cash flow from these two to cover my living expenses. So again, when you think about it, like I was saying earlier, if nothing goes wrong, I could theoretically survive indefinitely from the rental income, which is financial independence level 1. Now, in the next episode, we're going to talk about the mindset shift I want you guys to make when looking at money, the mindset shift I currently utilize, and why I don't believe in budgets. So if you want to not ever need to use a budget again, or figure out why I don't use budgets, tune in next time. Don't forget to comment, like, and subscribe. Drop a rating or review if you're on podcasts, and I'll see you guys in the next episode.